Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Hello and welcome. We're diving into something really exciting today. A close look at a major tech company's recent quarterly update. Specifically, their Q2 2025 earnings call.
Yes, hello.
And this isn't just about the numbers, is it? It feels like it's more about a vision for the future they're laying out. Pretty compelling stuff.
That's exactly right. The materials we looked at, they actually described this quarter as a seminal point. It's really more than just a financial update.
Seminal point, okay.
Yeah, what we're seeing is that, a significant strategic shift. I mean, this company, known for EVs and energy, right?
Right, leaders in that space.
Exactly. But now they're clearly signaling this ambition to be a major player in, AI, robotics, and all the services around that.
So big pivot.
A huge pivot.
Yeah.
And that's really the core story of Q2. It sets the stage for, everything else.
Okay, so for everyone listening, our job today is basically to guide you through all this information. We've gone through the earnings call, the update deck. It's a lot.
It is dense, yeah.
Our mission is to pull out the really key insights, maybe some surprising bits, those aha moments,
Yeah.
so you get the strategic picture without getting lost in the weeds.
Precisely. We're aiming to synthesize the most impactful topics, and that means covering both the challenges they're facing, which are real, and also these groundbreaking advancements they're talking about.
Okay.
So we'll hit autonomy, the AI progress, humanoid robots Optimus, and how the energy business ties into all of this, and of course the financials that underpin it.
Perfect. Let's start with what feels like the most immediate, tangible thing.
Yeah.
Autonomy actually arriving with the robotaxi launch. This isn't just theory anymore, is it?
Not at all. This is real-world deployment. They launched in Austin, Texas back in June.
Right, I saw that.
And the key detail, the really important bit, is these were first drives with no one in the driver's seat. Actually transporting paying customers. That's a huge step from development to, actual commercial operation.
So how did it go? What was the feedback? The early data?
Well, it's definitely a pivotal moment. Now, the initial operating zone in Austin was admittedly fairly limited.
Okay, started small.
Exactly. But the customer feedback seems to have been really positive. People described it as super smooth and, crucially, very safe.
That's key, the safety perception.
Absolutely. And they've put some numbers on it, too. Over 7,000 miles operated in Austin already.
7,000 miles. That quickly.
Yeah, and they reported no notable semi-critical incidents during that initial run. So it's early days, but it's a strong proof point for the system's reliability in a live city environment. Addresses some of that skepticism,
Definitely. 7,000 miles is quite a start. So, okay, what does this mean for expanding? Are they going slow and steady, or is the plan bigger?
The plans are, incredibly aggressive, actually, though they do keep stressing a cautious approach to safety.
As they should.
Right. So in Austin itself, the plan is to massively increase the service area. We're talking potentially 10 times the current operating region, and soon.
10 times. Just in Austin.
Just in Austin, yeah.
Yeah.
And then beyond that, they're already working on getting regulatory permission for other major U.S. areas.
Like where?
Think the Bay Area, Nevada, Arizona, Florida, places like that. The ambition, and this is a big one, is to be able to potentially address half of the population of the U.S. by the end of the year.
Half the U.S. population.
Right.
By year end, that's huge.
It is, but it hinges entirely on getting those regulatory green lights state by state.
Of course, regulation is the big hurdle.
It always is with autonomy. But it shows their confidence, doesn't it? That they're ready to scale fast once they get the okay.
It certainly does.
Yeah.
But, okay, that's the U.S. What about globally? Europe? China? Those are huge markets, but notoriously complex for self-driving tech.
Yeah, it's definitely a more complicated picture outside the U.S. For their supervised FSD, the system people can buy now,
Right.
they described the European regulatory hurdles as almost Kafkaesque, particularly in the Netherlands, which is often key for EU-wide approval.
Kafkaesque, so bureaucratic nightmares.
Seems like it. Even if the tech is ready, the process itself is just a major roadblock. But they did say they expect approvals for Europe are close.
Close is good.
Potentially a partial release this quarter, maybe wider later this year. And China, they expect to sort out the regulations shortly.
And that's important for sales, presumably.
Absolutely critical. They see FSD as the single biggest demand driver for their cars globally. If you can't offer the full feature, it hurts sales. Simple as that.
Makes sense. So connecting this back to the cars people already own, millions of them, especially Model Ys. Is this push towards autonomy just about robo-taxis, or does it change things for regular owners too?
That's a really important point they made. All their vehicles, they stress, are built capable of autonomy.
Right, the hardware is in there.
Exactly. And they see that capability as their biggest differentiator. It sets them apart. They also made a pretty bold claim that cars running on FSD are 10 times safer than cars not using it.
10 times safer, based on their data.
Based on their published safety report, yeah. So they're framing it not just as convenience, but as a major safety feature.
That's a powerful argument if the data holds up.
It is. And looking ahead, for personal use, they're projecting, cautiously but confidently, that unsupervised FSD, through self-driving for owners, could be available in certain geographies in the U.S. by the end of this year.
By the end of this year, for personal cars.
In some places, yes. And they pointed out the AI hardware in the Austin robotaxis. It's the same hardware that's already in customer cars.
Ah, so the capability is there.
It seems so. And they give this amazing example. The world's first autonomous delivery of a new Model Y.
I heard about that.
Yeah, the car drove itself, factory to customer's home, about 30 minutes, included highways.
Incredible.
And the vision is that becomes the default. In places like Austin, the Bay Area, by year end, your new car just delivers itself unless you opt out.
That really shows their confidence in the tech, doesn't it?
It really does.
So you mentioned adoption trends earlier. Is FSD actually catching on now? Are people using it more?
There's definitely a promising trend, especially in North America. Since they rolled out version 12, they've seen a 25% increase in penetration. So more people are opting in.
25% increase? Yeah. Okay. And the subscription model?
Still pushing that at $99 a month. They frame it quite cleverly, I think, as getting a personal chauffeur for almost $3.33 up a day.
Puts it in perspective against ride-sharing costs.
Exactly. It starts to look like a decent value proposition for the convenience.
But if the tech is getting that good and the price isn't totally crazy, why isn't everyone using it? Especially people who already own the cars.
That's one of their biggest challenges, frankly. It's a marketing and education issue. They found out that most people still don't know it exists.
Really? Even with all the news?
Apparently so. And maybe even more surprising, they said half of their own Tesla owners haven't even tried it once.
It's half.
Yeah. They use this great analogy. It's like having a cat that can sing and dance.
Okay.
But because it just looks like a regular cat, you'd never know unless someone actually showed you.
Ah, I get it. They need to show, not just tell.
Precisely. They need to actively demonstrate the capability, educate owners on how to use it, what it can do. The tech being there isn't enough if people don't know or don't try it.
That makes perfect sense.
Okay.
Okay, so this is where it potentially gets really transformative, right? If cars can drive themselves, what about the whole network? The business model beyond just selling cars?
This is where the vision really explodes into something new. The plan, starting maybe next year, is to let owners release their car to the fleet.
Let owners join the robotaxi network.
Exactly. Turn owners into sort of micro-entrepreneurs. There'd be a vetting process, obviously, like rideshare services have now.
Right, for safety and quality.
Of course. But the long-term vision is for this robotaxi fleet to go from, tiny right now to gigantic. And they expect it to have a material impact on financials around the end of next year as it starts to scale.
So monetizing the car when the owner isn't using it?
Yes. And then there's the Cybercab.
Ah, yes, the purpose-built vehicle.
Right. This isn't just an adapted car. It's designed from scratch for autonomy, optimized for a gentle ride, not performance.
Because it doesn't need a human driver's feel.
Exactly. And that design focus lets them target incredibly low operating costs. They're talking sub $1.30 per mile over time, maybe $1.25.
25 cents a mile. Compared to what for the current fleet?
They estimated maybe number $1.50 per mile for the existing cars, which they still called very competitive. But the Cybercab is aiming for half that.
How do they get it that low?
By optimizing everything. Powertrain efficiency, cabin durability for high usage, lower maintenance, less energy. It all adds up when you design specifically for robotaxi use. That cost reduction is absolutely key to making the whole network financially viable and much cheaper than human drivers.
And how do they fund building out this huge fleet?
Good question. Initially, they said it'll be off the company's balance sheet using their existing cash.
Okay.
But crucially, As soon as there is a clear cash flow stream from the robotaxi service itself, once it's proven and predictable,
Then what?
then it can be debt financed. They can borrow against those future earnings to expand faster without just relying on current profits or raising more equity. It's about leveraging the asset they're creating.
Okay, that makes sense financially. So this whole self-driving future, the robotaxis, the cybercab, it all comes down to the AI, doesn't it?
Hmm.
Let's shift gears. What's happening under the hood with the AI itself?
Yeah, absolutely. The AI is the foundation for everything. And they made a really bold statement here. They claim they are by far the best in the world at real-world AI.
Better than Waymo, Cruise, everyone.
That's the claim. They contrasted their approach, suggesting maybe Waymo vehicles are mistuned with God knows how many sensors. They argue their vision-only approach is better for the real world, more scalable.
Interesting.
And they introduced this metric, intelligence per gigabyte.
Intelligence per gigabyte, what does that mean?
Basically, how efficient the AI model is. They argue it's more important than just counting parameters because of real-world hardware limits, RAM, memory bandwidth in the car. They claim the highest intelligence density of any AI by far.
So lean but powerful AI.
Exactly. Efficient intelligence for real-world action. That's their philosophy.
And it's not just software, they're building their own hardware too, right? Chips, supercomputers?
Absolutely. The hardware's crucial. They gave an update on Dojo, their AI training supercomputer.
Right, Dojo.
Dojo 2, the next version, should be operating at scale sometime next year. And they put a number on that scale,
Yeah.
roughly equivalent to 100,000 H100 GPUs.
100,000 H100s. For context, H100s are NVIDIA's top AI chips, right? The gold standard.
Pretty much, yeah. So saying Dojo 2 equals 100,000 of those, it just shows the colossal computing power they're building specifically for training their AI models, processing all that driving data.
That's immense compute power.
It is, but they're not stopping there. They also talked about the AI5 chip.
AI5.
Yeah, they described it as spectacular, a profound game changer, expected in volume production by the end of next year.
A game changer how?
They didn't give specifics, but they did mention its power might even subject it to export restrictions.
Really? Like
Yeah.
military-grade tech?
Potentially.
Yeah.
It underscores how advanced they believe it is. And then there's this idea of convergence for future hardware.
Convergence?
Yeah, for Dojo 3 and something called the AI6 inverse chip. The goal is to have basically the same chip used across different applications.
Like how?
So maybe 2 chips in a car, some in the Optimus robot, and then lots of them on boards in data centers, a common architecture.
For efficiency and cost savings.
Exactly. Streamline development, lower costs, speed up deployment across everything they do, a synergistic hardware ecosystem.
Okay, so from cars to chips, and then to humanoid robots. Let's talk about Optimus. This still feels like pure sci-fi to me.
It's definitely one of their most ambitious projects, fundamental to the AI strategy. They described the current design, version 3, as exquisite.
Exquisite. Strong word.
Yeah, saying it has no significant flaws, suggests high confidence.
Yeah.
They expect prototypes in just 2 or 3 months.
That's soon.
Apparently, with scale production starting early next year.
Scale production of humanoid robots next year. What kind of scale are we talking?
Get this, the long-term goal is 1 million units a year.
1 million Optimus robots a year.
In less than 5 years. That's the target. They predicted it will be the biggest product ever for the company. Bigger than cars.
That's mind-boggling. What would they all do?
Well, initially, likely manufacturing, logistics, tasks that are repetitive or dangerous for humans. But the potential is huge. They did emphasize how hard it is, though. It's a very hard problem. Requires designing every part of it from physics first principles. Meaning nothing that's off the shelf actually works. They have to invent everything: motors, gearboxes, sensors, control systems.
Wow.
And critically, they're training its neural net using its lens-centered sensors, basically. Its eyes using the same techniques they developed for the cars.
So leveraging their FSD work.
Exactly. They see the car as a 4-wheel robot. Optimus is just a more complex robot, but the core AI training principles transfer. It's a huge advantage.
And are these just prototypes, or are they actually doing things?
They said Optimus robots are already walking around the office in Palo Alto 247.
Walking around 247.
Yeah, doing various tasks. They even described the Optimus lab as looking like the set of Westworld.
Westworld. Okay, that paints a picture.
The ultimate vision. Robots become so common that you don't even look up, just part of the background.
A powerful, slightly unsettling image. But okay, this raises a big question. We hear a lot about XAI and Grok too. How does XAI fit with their AI work? Are they competing?
That's a really common question. They were quite clear on the distinction. XAI, they explained, is focused on huge models, terabyte-scale models, and multi-terabyte scale models, like Grok 4.
The big foundation models.
Right, the massive AIs for general reasoning, language, running in data centers. Their own AI work, in contrast, is focused on much smaller models, 100x smaller.
Why smaller?
Because they have to be optimized for real-world AI. They need to run efficiently in real time inside a car or a robot using limited power and processing sensory data directly. So they're doing different things.
Different tools for different jobs.
Exactly. Complementary, maybe, but distinct focuses. They also shared a little backstory on why XAI was even formed.
Oh.
Apparently, some top AI engineers they wanted to hire were really set on working on artificial superintelligence, ASI, and they wouldn't join the main company just for car or robot AI.
So they might have lost them.
Right, potentially lost them to competitors like OpenAI or Google. So instead, they created XAI as a separate entity for those engineers focused on ASI.
Interesting. A strategic move to keep talent in the ecosystem.
Seems like it. It offers a choice. Work on superintelligence in data centers, or work on real-world AI in cars and robots.
Fascinating. Okay, this is clearly a company looking way, way ahead, transforming itself. But that kind of transformation isn't easy, and it usually shows up in the financials. Let's talk about the energy business first, often overlooked, but you said it's critical.
Absolutely. The energy side is being framed as more critical than ever, not just for, general green energy goals, but specifically for enabling their AI ambitions.
How so?
Because AI, especially training these massive models that they're doing with Dojo, is incredibly energy hungry. So the energy segment provides the essential power infrastructure for their own AI development and data centers. It's foundational.
So it's not just a side hustle, it powers the core AI strategy.
Yeah.
How big is the demand for this energy stuff from their viewpoint?
They see the scale of battery demand as gigantic, and they feel not that many people appreciate just how massive it is for the grid.
Gigantic how?
They gave this powerful example. Adding batteries to the U.S. grid could potentially double, more than doubling the energy output per year.
Double the output, just by adding batteries. How?
Because batteries let power plants run at their optimal capacity 24/7, store the excess energy when demand is low, release it when demand peaks. No more ramping up and down inefficiently. That constant, optimized operation is, as they put it, a really big deal for grid efficiency and stability.
That is a big deal. And their products, Megapack and Powerwall.
Megapack, the big utility-scale battery, is expanding as quickly as they can make them, with upgrades coming. And Powerwall, the home battery, they had a record Powerwall deployment gain in Q2.
So good growth there.
Yeah, contributing to record gross profit for the energy business overall. And they highlighted they're now deploying Megapacks made in their Shanghai Megafactory, showing global production scaling up.
Okay, demand is strong, products doing well. But you mentioned headwinds, earlier tariffs, policy changes. How's that affecting energy?
Yeah, there are definitely adverse impacts from what they vaguely called the big bill and tariffs. One specific example, the early expiration of consumer credits for residential storage.
The incentives for homeowners are ending.
Ending early, by year end. That could potentially cool off demand for things like Powerwall in some markets.
Okay. What about the bigger industrial batteries?
Interestingly, they said industrial customers are often willing to accept some of the tariff impacts.
Why?
Because they see the value. The battery's ability to unlock efficiency for the grid or their operations, plus the speed they can be deployed. The long-term benefits apparently outweigh the higher upfront tariff costs for many.
Makes sense. So how are they responding to these policy challenges overall?
Their main strategy is investing heavily in U.S. manufacturing, trying to onshore production to mitigate policy and tariff impacts.
Like building battery factories here.
Exactly. Their first LFP cell manufacturing facility is supposed to be online by the end of this year. LFP batteries are great for storage, long life, lower cost.
Right.
And they're launching a third megafactory near Houston in 2026, a huge boost to U.S. megapack production. Their view is big solar projects will keep happening because the energy is necessary, and there just aren't quick alternatives in the near term for that scale of power.
A pragmatic approach. Okay, so navigating a complex environment, investing heavily. Let's tie it all together with the Q2 financial picture. What did the overall numbers look like? How healthy are they amidst this pivot?
Okay, the headline numbers. Total revenue was down 12% year over year to $22.5 billion.
Down 12%. Why?
Mainly three things. Lower vehicle deliveries compared to last year, less money from selling regulatory credits, and a lower average selling price for their cars.
Okay, and profits?
Operating income took a bigger hit, down 42% year over year to $0.9 billion. That resulted in an operating margin of just 4.1%.
Wow, 4.1% margin. Why such a big drop?
Primarily higher operating costs, especially a big jump in R&D spending for all these AI projects we've talked about, plus the ongoing impact of tariffs on their costs.
So investing heavily in the future is hitting the bottom line now.
Absolutely. On the cash flow side, operating cash flow was actually up sequentially from Q1, which is good.
A positive sign.
But capital expenditures, CapEx, their spending on factories equipment also grew a lot. So free cash flow is only $0.1 billion for the quarter.
Barely breaking even on free cash flow.
Pretty much. And they expect CapEx to be huge for the full year, in excess of $9 billion.
$9 billion. On what?
Investments in cybercab production, securing raw materials, what they called semi-mines, and building out all that AI infrastructure, dojo, etc. It's massive investment.
But they feel they have the cash.
They stated they have sufficient liquidity to fund the roadmap. Oh, and one other thing affecting the numbers, Bitcoin.
Ah, right. They still hold Bitcoin.
They do. And the accounting rules mean they had a mark-to-market adjustment, a $284 million gain in Q2 after a $125 million loss in Q1. Adds volatility, you know.
Definitely. Okay, so summing up Q2. Financials under pressure, profitability down significantly, but driven largely by massive deliberate investments in this future vision of AI, robotics, and autonomy.
That captures it perfectly. It's the cost of the pivot.
So what does this all mean for the cars, affordability, and the long-term vision they're painting?
Well, the existing vehicle lineup keeps getting refreshed. Model Y especially is still a global powerhouse, best-selling car of any kind in the world still.
Still #1 globally. Impressive.
Yeah, and topping sales charts in parts of Europe too. That strong core business is vital while they make these big bets.
For sure. And the affordable model. Any updates there?
Yes, progress. They did the first builds of a more affordable model back in June.
First builds. Okay. When is volume production?
Planned for the second half of 2025. They did admit the ramp-up will be slower than initially expected.
Way slower.
Mainly a strategic choice. They prioritized building existing models, especially in the U.S., to meet demand before the IRA EV tax credits expire or change.
Maximizing the benefit of current incentives first.
Seems like it. The goal for the affordable car isn't just price, though. It's designed not to negatively impact revenue or gross margin. They want it to be a car people love and want, but accessible, available broadly by Q4 next year.
Okay, affordable model is key for volume. But they also mentioned another angle on affordability, didn't they? Letting the car earn money for you.
Yes. This is maybe one of the most potentially revolutionary ideas. Connecting affordability directly to autonomy monetization.
How does that work again?
The idea is once unsupervised FSD is widely legal and available, owners can choose to release their car to the fleet, let it operate as a robotaxi when they're not using it.
Right, the Airbnb analogy.
Exactly. Just like renting out a room makes your house more affordable, letting your car earn income could drastically cut the cost of ownership, maybe even make it profitable.
And they think this is coming soon.
They sounded very confident about it happening next year in the U.S. at least, subject to regulations, of course. But imagine that your car pays for itself, or more. It completely changes the economics.
It really does. Transforms a depreciating asset into a potential income stream. Okay, so this whole picture, cars, AI, robots, energy, finance, it's a profound transformation. What's the big overarching message here? Where are they heading?
The message is one of, frankly, audacious ambition. They're working on a new master plan to articulate this shift from a pre-autonomy world to a post-autonomy world.
Pre to post-autonomy.
Yeah. They acknowledge there will be teething pains, disruptions, challenges during the transition, but they seem utterly convinced they can profoundly change the world in a good way with this tech.
And their ultimate goal.
They stated it pretty bluntly. If Tesla continues to execute well with vehicle autonomy and humanoid robot autonomy, it will be the most valuable company in the world.
The most valuable company in the world. That's the target.
That's the target. But crucially, they added the qualifier, provided they execute very well. They know it's a massive challenge.
Execution is everything at this scale.
Exactly. Oh, and there was a brief mention of shareholder control, too. The technoking, wanting enough control to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy.
Finding that balance, an ongoing discussion.
Seems so. Hopefully addressed at the next shareholder meeting.
Well, as they say, the best way to predict the future is to invent it. And they are certainly giving it their all. It's an incredible vision, but yeah, requires unbelievable execution across so many complex areas. And that really brings our discussion today to a close. We've covered a lot of ground. The real-world arrival of autonomy with robotaxis, the huge push in AI hardware like Dojo and AI5, the ambitious plans for Optimus robots, the increasingly critical role of the energy business, and how they're trying to make vehicles more affordable, even income-generating, all while navigating some tough financial realities.
It's really quite something. And maybe a final thought for you, our listener. Just consider the sheer scale of this ambition. It's not just self-driving cars, it's potentially reshaping transport, energy, maybe even labor with these robots. What part of this transformation do you think will actually touch your life first? And what unforeseen challenges or maybe opportunities might pop up as this future starts to roll out? Lots to think about.
Definitely lots to think about. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.